Let's talk about tax loss harvesting. Many of you have written to me and said, David, what is tax loss harvesting? How do you do it? Who can do it? Let's discuss, bearing in mind, of course, that you really should talk to your tax professional before doing anything, before making any decisions to see how how any decision can impact your tax liability. Tax loss harvesting is a strategy that you can lose to lower your taxable income and reduce the amount in taxes that you have to pay. And the way it works is if you've made money on some investments, but you've lost money on others, let's say you made profit on stocks, but you lost money on crypto, you can realize the loss to offset the amount you owe on capital gains. So you may not want to sell the stock just because it went down. You may want to hold it for the long term, but the idea is you sell it in order to harvest an on-paper loss, which can save you money against other investments where you may have realized a gain. And even if you don't have gains, you can still use the strategy to reduce taxes owed on ordinary income in the current year or in future years. Tax loss harvesting is something that can only be done with taxable accounts. That's an important thing to understand. And something that people may not always realize about tax loss harvesting is you're not actually getting the taxes canceled. It's actually a tax deferral. But a tax deferral is good nonetheless, as we've talked about in other videos, because you'll have more money now that you can invest and make future gains on. You also don't know how tax policy may change in the future. So there's this very general concept. And of course, there are exceptions and different tax professionals will give you different takes. But the idea is if I can get a known tax deferral now to pay a tax in the future, the law may change again and maybe I can avoid paying it again. Now, the really important thing is there is a limit to how much you can tax loss harvest, and it is $3,000 per year. Okay, this is something some folks miss. 3,000 limit per year. Imagine you thought, oh, I don't know, Tesla was going to be the next big thing, but you thought about it at the wrong time, and you have a $50,000 loss on Tesla, and you say, well, I'm going to sell and then take a $50,000 loss. You're limited to $3,000 per year. So you can take 3,000 this year, and that'll leave you 47,000. You've got to sell it all now. And then next year you can take another 3 and it'll leave you 44. You can use the loss in future years, but it's to a maximum of $3,000 per year. Beyond that, you can carry forward the loss to offset future tax liability. Now, really, really important thing to understand when it comes to tax loss harvesting. There is something called a wash sale rule. And a lot of people get some pretty interesting ideas. What am I even doing? I'm trying to underline and it's not working. There it is. Oh my goodness, it's terrible. It's because of the COVID that my underline is bad. The wash sale rule. You might say to yourself, I'm going to sell $1,000 worth of losses I have on a stock. I'm going to lock in the losses on paper. I will immediately buy back the same stock. I have the same exposure. If I bought the stock initially at 20 and it went down to 10, I sell it at 10, lock in the gains, immediately rebuy it at 10. I've got the same exposure, that stock at 10, but I've locked in a tax loss. Can't do it, okay? The IRS has what's called a wash sale rule, which requires that you wait 60 days before you can buy back the same security. You can't sell Microsoft at a loss, harvest the losses for tax purposes, and buy it right back. Now, maybe you would sell Microsoft and buy Apple in its place. And you might say, well, they're both large tech companies, so I'm still getting exposure generally. So you can harvest the loss and maintain a similar level of exposure in a part of the market. That's one thing. You also can't buy back a substantially identical security, like 2 different S&P 500 index funds. You might say, oh, here, S&P 500's down. I'm going to harvest a loss. I will sell my Fidelity S&P 500 index fund, lock in the loss for tax purposes, immediately buy a Morningstar S&P 500 index fund. Can't do it. Crypto currently doesn't have a wash sale rule. So you could theoretically buy back Bitcoin you sold in order to harvest losses. Legislators may close that loophole in coming years. Now, often investors start thinking about tax loss harvesting at the end of the year. That's because it's your last moment where you can use the strategy for the current tax year. So sometimes people get to the end of the year, 2022, for example, they say, oh, now I'm expecting a big tax bill. Now I'm running out of time to take losses. Let's do it. It's not really the most strategic way. You may have more opportunities to take advantage of in March or in June or whatever the case may be. So keep that in mind. Always talk to your tax professional before taking action, but that is a general idea of tax loss harvesting.